Hey everyone, it's Friday morning, December 13th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Cela, and let's talk about what exactly was moving the markets yesterday. Before we get started, a quick note, today's episode is sponsored by AMF Capital Asset Management Frankfurt. For tailored investment solutions and top-quality mutual funds, visit amf-capital.de. Well, it wasn't the kind of day Wall Street hoped for after a streak of impressive rallies. President-elect Donald Trump even rang the opening bell at the New York Stock Exchange, but that wasn't enough to keep the momentum going. The Dow and the Standard & Poor's 500 both fell about 0.5%, while the Nasdaq Composite slipped roughly 0.6%. One bright spot? Apple shares ticked up slightly to hit a record high, but overall, tech couldn't carry the market this time. Over in bonds, the 10-year Treasury yield climbed 5 basis points to close at 4.32%. That's the highest level we've seen since late November, as inflation data kept everyone on edge. Speaking of inflation, Thursday brought us a fresh update with the November Producer Price Index. Wholesale prices rose 0.4% from the previous month, double what economists were expecting. That's a signal inflation might not be cooling as much as we thought, which puts the Federal Reserve's plans under the spotlight. Traders are now reconsidering whether rate cuts are a sure thing in January. Adding to the downbeat mood, Adobe revealed a revenue forecast that disappointed investors. The company's struggles to turn its big bets on artificial intelligence into profits sent its stock tumbling nearly 14%. So, what's next? The inflation story isn't over, and it's clearly driving the narrative for markets. All eyes are now on what the Fed does next and how tech companies like Adobe handle these AI challenges. That's it for today's Capital Markets Quickie. Thanks for listening. Don't forget to subscribe, and I'll see you back here tomorrow for more market insights. Have a great day, everyone.